Hello and welcome to Mrs. Law's class. In this lesson, we're going to take a look at what net pay and deductions are. So when you get a job and you finally are earning some income, you'll notice that your paycheck is always lower than your gross pay, what your employer promised to pay you. Why is that? Well, that's because of something called deductions. So deductions are amounts of money that are deducted or taken off from your paycheck for things such as income taxes. Income taxes is money that is paid to the federal and provincial or territorial governments. There's something called employment insurance, which is abbreviated EI. Canada Pension Plan, which is abbreviated CPP. There could be union dues, disability insurance or other pension plans, and even health or other benefits taken off your paycheck. So what do some of these deductions do, and why are they deducted from a person's pay? Well, let's take a look at 3 government deductions. All right, the first one is income tax. So income tax is money deducted on behalf of the federal, provincial, there's a typo here, I should say, and territorial government, so your city, and it's used to pay for things such as healthcare, education, and even roads. Okay. The second type of deduction that's government related is called employment insurance. And some people know this as EI. So this is money deducted to a fund, and it pays Canadians if they lose their job in the future, something that's no fault of your own. So if you quit, you don't get paid EI. So this is used to pay you while you're looking for work or upgrading your skills. It will also help if you are sick, pregnant, or caring for a newborn or adopted child, or caring for a family member who is seriously ill. All right, the third government deduction is called the Canada Pension Plan, or the Canadian Pension Plan. And you will often see that this is abbreviated CPP. And this is money deducted to provide for pensions and benefits when contributors, such as yourself, retire, become disabled, or you die. So almost all individuals who are 18 years of age or older and work in Canada must contribute to the CPP. Now, right now, many of you are still in high school, and you might notice that you will not have to pay CPP, and you might not even have to pay EI. It depends on how much you earn. Now, something to note about income tax. Income taxes are only paid on something called your taxable income. Okay, that means that income that can be taxed. So this is the income after certain deductions are made, but before other deductions are made. Now that seems a little bit confusing. So there's certain deductions that are subtracted to determine your taxable income. So these are benefits. So if you belong to a union, there's certain company benefits like parking, company pension plans. So these are deducted from your from your income, and then you will get something called taxable income, and then you're going to pay tax just on that portion. Okay, so once you have your deductions, all your deductions taken off, you're going to get something called your net income or net pay, and it is the final income after all the deductions have been taken off your gross pay. So it is the amount that is on your paycheck. So sometimes you will hear net pay called your take-home pay, because that's actually how much money you get to take home or that's deposited into your bank account. So let's take a look at a couple of examples that are related to our net pay and also deductions. So in example 1, John's life insurance is 1.5% of his salary of $450. How much does he pay for his life insurance? So we can see that's 1.5% of, and of usually means multiply when we're talking about math. So we're going to take 0.015, and it's going to be times $450. So that means 1.5% of the $450 is used to pay for life insurance. So you're going to go to your calculator and type that out. And we're going to get $6.75. So let's say that for John, that was all he paid. Let's say he didn't pay EI, he didn't pay income tax. Let's say he doesn't make enough to pay that. So we could say that his net pay, if it was asking to find our net pay, is $450. And then we're going to minus the $6.75. So we're going to go to our calculator and we can subtract. And then that will give us $443.25. All right, let's take a look at a different type of example. So in example 2, Jar's gross pay was $785. His net pay was $625.42. So how much were his deductions? And what percentage of his gross pay were his deductions? So to find our deductions, we know that they are subtracted from our gross pay. So we know our gross pay, which was how much we got paid at the beginning, but then we actually take home only $625. So to find our deductions, we're going to take $785 minus $625.42. Okay, go to our calculator, and we calculate this to be $159.58. So it's often useful, or people are curious to know, well, how much of my pay, my gross pay, is actually being taken away? So to find the percent of my gross pay, I'm going to take the $159.58. I'm going to divide it by my gross. And then don't forget, we need to times by 100 to get the percent. So go to my calculator again, we type it out, and we can round this to 20%. So that means that 20% of Jar's gross pay is actually going to deductions. And that actually sounds pretty reasonable. Usually about 20% of our pay, even sometimes 25% of our pay, goes to deductions. And that's the end of this lesson.